Hey guys, what's up, how's it going? My name is Robin. Welcome back to another video on the channel, and in today's video I'm going to be talking all about Canadian growth stocks, and I have two growth stocks I'm going to be talking about today. So before we get in the video, I just want to say a big thanks to everybody who's been watching my videos lately. The channel is growing at absolutely crazy pace, and I just want to say big thanks to everybody who's been liking the videos, the past subscribers we got, and all you guys who take the time to comment on my videos. Appreciate it very much. Thank you very much, everybody. So if you guys are familiar with this channel, I love to talk about Canadian stocks, and I like to talk about Canadian dividend stocks. So growth stocks are something that is a little bit new to me. I do growth-based investing. I do a little bit of everything, but I don't talk about growth stocks that much on this channel, and it's also something that I don't invest into a lot of myself. So the cool thing about this video is this is a cool learning experience for me, and I'm going to be doing like a new types of videos where I talk about growth stocks on a regular basis. So let me know what you guys think about these videos, and I'm sorry if I'm not the most educated when it comes to growth stocks, but I'm just going to kind of pick a few things about them that I like what I see, and I'm going to share some information about two growth stocks in this video, and let me know what you guys think about me doing more growth stocks on the channel. Before I get in the video and I share with you guys the two growth stocks I'm going to be talking about today, I just want to say if you guys enjoy the content, be sure to smash that like button like you guys have been doing already. And once again, I do appreciate it very much. If you guys want more Canadian-based investing content, be sure to subscribe to the channel. Alright, so the very first growth stock that we're going to talk about in today's video is none other than Good Food Market. So if you guys aren't already aware, Good Food Market is one of Canada's leading meal kit delivery services. They are actually estimated to have about 50% of the Canadian meal kit delivery market. So it just tells you a lot about the company. But as you guys can see, they have a cool website where you can order recipes and get basically food and meals delivered to your home, and then you guys can just cook them really easily. They have a cool little website, so definitely check it out if you guys haven't already. And this is a really cool company, and I see them doing really well going into the future. Alright, so for starters, Good Food Market has slowly been increasing its earnings over the past couple of years. As you guys can see here, their revenue and earnings continues to grow as time goes on. And remember, earnings and revenue growth is one of the best things you can look for in a company. If a company is regularly growing their earnings and revenue, that's going to reflect in stock price and dividend increases going into the future. So from 2000 to 2008, we've seen a nice increase in earnings. And in 2018 to 2019, once again, huge revenue increases. Then 2019 to 2020 is absolutely crazy, going from $161 million in revenue to $285, and their earnings is also increasing as well. Basically, it's telling us that this company is getting more and more money to actually spend on themselves and will allow them to grow even further into the future. And I think at the end of the day, this is most likely going to be happening because more and more people are turning to ordering meals online. I see a lot of people on my Facebook, and there's a lot more revenue going into companies that actually do like online deliveries and stuff like that. And when it comes to like grocery meal kits and stuff like that, I actually see them becoming very popular, and a lot of people are turning that because it's easier and more convenient for people just to order meals instead of, cooking them themselves. And as you guys are probably already aware, Good Food stock has also had an extremely good run this year in terms of stock price as well. We've seen them opening up the year at $3, about $3 Canadian per share, and they just skyrocketed once March hit, and they are currently trading at about 8.87 per share. So that's huge increases for this year. And if we bring up Good Food Market and Wealth Simple Trade here, we can see that the stock is up a ridiculously 188.93% year over year. That is absolutely ridiculous growth for the stock over the past year. And with the online trends going towards more people ordering stuff online and kind of doing everything online nowadays, I think at the end of the day, this is going to mean more revenue, more business for Good Food Market, especially since so many people are using Good Food Market, and it's got such it's already captured like a large chunk of the Canadian subscriber base. Most people who are using like the online meal kits delivery services in Canada are actually from Good Food Market. To give you guys an example of the numbers that Good Food Market has, is going towards the end of 2020. So far, it has a total of 280,000 people currently subscribed to their program. That is absolutely crazy. And I think after the pandemic and going into the future, more and more people are going to be using Good Food Market, and I think it's just going to continue to grow at a pretty decent pace. Now, Good Food Market is a relatively new company, so we don't have a ton of history and a ton of years to kind of back it up. It was funded in 2019, so it's still kind of in that early growth stage. But the good news about this is that this is when companies really start to get some good revenue, and over the next couple of years we could see some big increases and some big share price appreciation if Good Food Market starts to do well. So I think this might be a good opportunity to buy like like a good solid quality company before it really starts to take off, kind of, so to speak. And the nice thing about this is that the company actually experienced pretty good growth even before the pandemic happened. So if we go all the way back to 2017, we actually seen pretty decent growth from Good Food Market. So I think even without the pandemic, the company would still be growing. And I think the pandemic just really shot it up. So that's also a really nice thing to see. And at the end of the day, even though I don't own any shares of Good Food Market myself, this is definitely a stock I think is worth investing into. And as I get more, I learn more about growth stocks and whatnot, I think going in the future, and let me know what you guys think about this as well. I think I might start a growth-based portfolio where I might just kind of play with a little bit of money, and maybe we can look at some Canadian stocks worth putting in there. And if I was to build that portfolio, I'd probably stick a couple shares of Good Food Market. Good Food Market Corp is currently trading at $8.87 Canadian at the time of doing this video, and it trades under the cool unique ticker of food here on the TSX. Good Food Market currently does not have a dividend yield, as they are more interested in taking their revenue and earnings and putting it back into growing a company, which really basically makes this stock a 100% growth stock by definition. Alright, so if you guys are buying Good Food Market, let me know in the comments below. Alright, so the next stock we're going to talk about in today's video is yet another new stock to me, and this is one I've seen a lot of other people talk about on YouTube, but I've never really inspected myself, and that is Lightspeed POS. And throughout 2020, Lightspeed POS has actually had a pretty decent run. So Lightspeed POS is a company that's been around a little bit longer than Good Food Market. They are a cloud-based computing website that offers e-commerce services and all kinds of different services for retailers who want to move their businesses online. As you guys can see here, I'm on their website, and they allow lots of cool services, kind of almost similar to Shopify. They offer like email marketing and all kinds of different things here that online retailers or restaurants or whatever business is going online might want to do. Now, although Lightspeed POS hasn't had as an impressive run as some other Canadian e-commerce stocks, talking about Shopify here, nonetheless, it still has done pretty well. If you guys pay attention to the stock price over the past little while, Lightspeed POS has done well, specifically growing in 2020. And once again, if we bring up Lightspeed POS into Wealthsimple Trade here, we can look over the past year and we can see the absolute crazy gains that Lightspeed has had, growing up 107% in the past year and still continuing to grow quite a bit. So they're doing really, really well. And they've actually, if you want to talk about it this way, the pandemic has actually helped this company, just like Good Food Markets, grow and just like really accelerate their growth as everybody once again is starting to go online. One thing I really like about Lightspeed POS is that they actually are a pretty big company. They have a market cap of about $8 billion, which actually surprised me. It was nice to see this when I actually did the research. And just like Good Food Markets, their earnings have been steadily increasing as well. Now they do have a lot of expenses here. As you guys can see, their revenue has been growing, but also they're pretty negative in the earnings. But this is kind of expected. So one thing I would like to see from Lightspeed POS is if they could get these earnings up to be a little bit more positive, as well as increase their revenue. That would be really nice to see. But nonetheless, they've still had a pretty good year, growing quite a bit in 2020. And at the end of the day, I also believe the entire e-commerce market will continue to grow well over the next couple of years. And you guys can see that like in the reflection of technology stocks doing so well. And there's a reason why I picked two like internet e-commerce based companies. If you look at Good Foods Market, they're also like an internet online based company, and Lightspeed POS is also like an online based services provider. So these companies, I think going in the future, are going to do really, really well. So I think maybe getting them while they're still growing is definitely a good opportunity. And at the end of the day, guys, because I like to be fully transparent, I also don't own any shares of Lightspeed POS, but it might be one I might actually add to my watch list. And if I was to build a growth-based portfolio, I'd probably keep an eye on it. So what do you guys think at the end of the day? Do you guys think Lightspeed POS or Good Food Market is the better buy? If I was to make my honest opinion on this, I'd probably go with Good Food Market, just because I see like the financials and stuff in a little bit of better place. And even though the share price has grown quite a bit this year, it's still relatively low. I think they're both decent stocks to invest into, but if I was to pick one that maybe I think might have the better future or the better investment, I'll probably go with Good Food Market, just because I think it's a little bit more stable and it still has a little bit more growth yet to achieve. But at the end of the day, I think they're both pretty solid stocks. Lightspeed POS is currently trading at $71.65 Canadian at the time of recording this video, and just like with Good Foods Market, it actually doesn't have a dividend yield. So they're putting all their money once again into growing the company, and this is how they've been able to grow so much over the past little while. So we might see a dividend yield in the future, but most likely not, especially if they want to get those earnings up. Alright guys, so that's it for this video. So let me know what you guys think of these growth stocks in the comments below. Let me know which ones you guys are holding or which ones you're buying, and let me know what you guys think about them. And also, before we end this video, I also want to kind of mention once again, if you guys are interested in me building like a growth-based portfolio and talking more about growth-based Canadian stocks, let me know, because this would definitely be something I'd love to do going into the new year. I think it'd be like a new cool way to add more content to the channel that's a little bit more different than like the dividend stocks that I talk about on a regular basis. And like usual, guys, if you guys enjoyed the video, please give it a big thumbs up, and remember to let me know what you guys think in the comments below. If you guys enjoyed this video, I'm going to link to another video on my channel. It is my top 2 undervalued Canadian stocks video. I did that a couple days ago. Check that video out. A lot of you guys enjoyed that video. If you guys want to watch, if you guys need some more content to watch, check those videos out. So thanks for watching, guys. Hope you guys enjoyed the video, and I'll see you guys later.